Good evening, everybody. Steve Ankerstar here. Thank you so much for listening in. I just wanted to get a quick note out. Today was especially tough, not just on its own, but following Friday's big sell-off, and it started really Thursday afternoon. It's moved a lot. If you add all that together, that's 7-8% in such a short time frame. We really haven't seen that since the COVID sell-off of March 2020. But today marked a unique point in the stock market in the fact that it officially kicked off a bear market. So I wanted to get into some definitions for you. And we'll go over the bear market here in a second, but generally it's the S&P 500. And when you think bear market, it seems like we've already been in a bear market. Well, the S&P 500 is what everybody uses as the bear market. But you're right, the NASDAQ and the QQQ and technology, we've been in a bear market for 2 months, right? And that's why it hurts so bad, or that's why it feels so much worse than a regular bear market. But we're going to peel that back a little bit. So hopefully you enjoyed the title, Stay Calm, Hold My Bear. I did toy with a couple others. Grin and Barrett came to mind. And then, of course, since we just had Top Gun, I was going to go with Talk to Me Bear. But I don't know. Still kind of a toss up on the last two. So stay calm, hold my bear. What does that mean? We're going to talk about what it is and what the bear market strategy, which again, the bear market strategy already kicked off for most people, right, before the bear gets here. We'll talk about those two sorts of things. But in the way of memes, of course, not to make light of the situation, but if you do Google meme hold my bear and then get rid of the hold my beer memes by saying, no, I actually do mean hold my bear. That's about the only one I came up that was worthwhile. So shout out to 9gag.com that came up with that. But anyhow, so yeah, we're going to talk about how to hold my bear, meaning hold on to long-term investing while you're in the actual bear market. All right, let's go over to an article I found on Seeking Alpha. So what I wanted to do is to present to you the history of bear markets and what they actually mean. So complete history. Thank you, Kimberly Leonard. Credit for you and Jason that put this out again, May 27, 2022. This is when we knocked on the door of the bear market not too long ago. So these folks put it out. I thought it was a great article and it's quick and easy to understand. So it's all part of the market experience. You can see there since 1928, the S&P 500, which again is the one everybody counts, has experienced 26 bear markets. Okay. So you're like, all right, so they do happen when you think 28, almost 100 years. So what's that? Averaging that almost every 4 years. They kind of don't happen that way, but that would certainly be the average. But what's the definition? Market decline of 20% or more for at least over a 2-month period of time from the all-time highs, right? So we saw when was the last one, right? It was in March, it was COVID, March 2020. We saw that 30+% dip. Really quick and it marked the bear market. And then we, of course, you have to end a bear market, you have to have new highs, right? So it can take a while. It's funny, it says bear markets can be part of a recession where the economy has high unemployment and negative GDP output. Well, I think for sure we're going to have the negative GDP output. I don't know if we'll have a full 2 quarters in a row to officially mark a recession or not, but unemployment, you got to be kidding me. We have all-time low, not all-time low, but we have really low unemployment. So, I mean, that's not an issue at all. So it's really different this time. The media is, I just got off with the Zoom with a couple of clients in a row. And it's like the media is painting this like the end of the world. Like this was 2008 when the financial institutions were going under and had to be saved by the government. None of that's happening. Yes, we have inflation. Inflation is annoying and terrible, sucks, if you will. We have some supply chain issues. So you can't get things like synthetic motor oil in Austin. Anyway, it's like, I could have it shipped, I guess, to me in Amazon so I can get an oil change in my car. But, things like this are just inconveniencing for sure. But it's not like JP Morgan Chase is about to implode. That would be a really big deal. So you see the next one, cyclical nature of the markets. The market's undefeated. That's why, I say this almost every day now is, to lose faith in the market, you would have to lose faith in the United States, and you'd have to lose faith in the concept of capitalism, and lose faith in the idea that businesses can't be brought about and make money. And businesses that aren't good get killed off and better businesses continue to run. if you want to give up on all of that, then yeah, it's probably not for you to invest in the stock market. Go find something else. But if you want to invest in the stock market and stay invested in it, you have to acknowledge it's undefeated. Undefeated record, right? There's 26 bear markets and 27 bull markets. There's your undefeated. So yeah, there are some bad games, but it's 100% of the time the market's gone back to new highs. So generally, and I showed another one this morning, I didn't, in my morning brief, but I didn't bring it up now, but when you look at 20-year periods of the US market, the lowest return over any 20-year period, if you run all the different scenarios, was 90-some%. That's the lowest. The 10th lowest was up over almost 250%. So everything above that was higher, right? So anyhow, this is just more to educate and not try to tell you to stay the course, but stay the course. Right? You don't need to go to cash here and think that, you can time it on the way out. It's been proven people can't market time. So you do need to use the bear market strategy. You need to clean up the portfolio, get out of speculative stuff. I mean, Bitcoin crashed this weekend. The crypto market has been a dumpster fire. So just get out and then you can get back in later on. But your core holdings, your Apple, Amazons, and Googles of the world, you can hold these through this. You don't care 1 ounce about what's going on other than the numbers look ugly when you look at the app or log in. But those are companies that have not changed due to what's going on right now. So, all right, let's look at the bear markets. The average decline is 35%. We're at 20 in the SPY. Obviously, we're over 30 in the technology. And the average length of time was 289 days. So, okay, think a year, right? So you have all this historical stuff. You can go to Seeking Alpha and then look up this article if you want, but really look at the last bear market we had. I know it was COVID induced, but yeah, 33 days. Woohoo! And then the one before that was in 2009. It was 62 days. Do you see why we're so spoiled? So really the last real bear market we had that lasted over a year was in 2007, 2008. And then the real one before that was back in, the tech crash, 2000 to 2002, a couple of bear markets there. But we have been pretty spoiled. We've been going up, 18, 20, 25% for year over year over year over year. So just that can take your awareness away from these things happen, right? Like I always use the vacation analogy. I don't care where you are, storms roll through paradise at different times. Those happen. Know they're coming and then they go away, right? So that's what you're seeing here. All right, here's your bear markets that lead to recession. So they talk about predictors of recessions, and you have 26 bear markets, and we've had 9 recessions. So it's predicted 26 out of the last 9 recessions is the joke, right? But if we do have a recession, it's you're going to dip into the last one was 33 days. Obviously, we're into a recession for COVID. We were right back out of it as an economy. So things that really can't be held back is the American economy, right? You just have a lot of people that are independent, smartphones out there, so you can start a business on your smartphone and go make money for yourself. I mean, it is really an amazing construct. So I'm not worried at all about the future of the US economy. When you look at it from a chart perspective, and I'll close with this, the bear market strategy started months ago. It's kind of clean out of the speculative stuff. I stayed with crypto way too long. Look back, put that as a debrief comment. Even some Black Rifle coffee I dumped today. I love the company, but subscription model going into a likely recession. I got to get out of things with anything with their subscription model to it, right? Is my opinion. For some reason, I can't say that right now. But when you look at the selling that's been, why does this feel so like it hurts so bad? Is when you look at these 3 days. These 3 days, this is a 9-month chart of the S&P 500. These past 3 days have been straight down and straight down hard. So I think, the only real mistake here would be to go to cash, right? And say, oh my gosh, the world is over. I'm out, volume's picking up. This has got that's these red bars over here. Volume's picking up to where it's the end of the world. Well, look at the last time this happened back here in January, 4 days in a row of the end of the world. And then you have this huge green day, right? So I don't know. I'm not going to try to predict the market on a day-to-day basis, but I'm also, we did break new lows. I did not think we would. I thought the bottom would hold. It did not. But, that's the way it goes. You can only move forward from here. Am I okay with putting new money to work here? I am. If you have any doubt, I had a conversation with a guy today who's like, I'm sitting on a large amount of cash. How do I put it to work? or what day do I put it to work? I'm like, well, don't pick a day. Just, every month, put like 10% of that cash. If you have 250K, put 25K to work every month. Pick a day. Doesn't have to be the first. Pick the 7th, whatever your lucky number is, and just put that money to work monthly. And then, all you're trying to do is buy through the bathtub. Okay. We do have elections coming up in under 5 months. Am I going to call that the market's going higher? I do think we're going to see some switching of power within that election. I think that will bring the market higher, but it doesn't solve inflation, right? So inflation's raging right now. So that has to break. The peak inflation narrative did not hold. So we're not necessarily past peak inflation. So we saw problems out there. So all in all, is this the lock and load moment? No, it's not. It's literally, stay calm, hold my bear right now. I did a stay calm, pass the ammo brief 1 month ago today. Actually, that's kind of weird, 1 month, right? But now it's just, stay calm, hold my bear, which is going to be like the stay the course, right? Hold the line. So we'll stay tuned day by day. If we do have another streak like this, obviously I'll put another video out. And if we do get to the lock and load moment, again, that's referencing a video I made March 24th of 2020, calling the bottom. We'd have to get more towards the 30% plus before we can make a call like that, where it's just go find every penny you can and jam it into the market, because it's gotten crazy. So with that, thank you so much for listening in tonight. We will stay tuned on how things are tomorrow morning and throughout the week. So if you ever have any questions, just reach out. You guys have a good night. Bye.